Hey traders, Cousin Vinny coming to you from theclosingprint.com on Sunday, July the 5th, 2015. In this video we're going to cover the indices. We'll look at the positives, scenarios that could play out, as well as the negative scenarios that could play out depending on the caveat, Greece, and the ECB. We're watching breadth, a negative 21 to 1, down volume killed up volume. We're looking for an MAD or 90% up day to confirm that institutions may be buying. We have yet to see that. CPC put call ratio, it's in a bounce zone for equities. Currencies, US dollars currently at a trend line overhead. Bonds, we are seeing yields continuing to move higher, which is good for banks, bad for REITs. We see TLT lower. Junk bonds look like they could be testing the 50 period and showing risk off trade. Commodities, crude oil is range bound, but it did lose the 50 period moving average last week, and it's currently right at the bottom of its sideways range for the past 2 months. We'll take a look at a chart of that. Setups, we'll look at some IBD names that are new on the list. Remember, we have ticker.tv, a new channel. It's ticker.tv/cousin_Vinny, and I've been trying to broadcast at around 6 o'clock a.m. Eastern Standard Time. You might want to check that out. Here is a chart of the Shanghai index, which we pointed out was down over 29% over the last several weeks. Continues to move lower. We see prices gliding along the lower Bollinger Band, and slow stow and MACD are at extreme values and could turn, so you want to keep an eye on price action. The spiders have shown some resilience in the bounce that we saw on Tuesday and Wednesday. Thursday we closed a little bit lower than Wednesday. We tried the 10 period EMA, the magenta line, and we have the overhead 50 period moving average to deal with this week, as well as this volume by price bar. Slow stow continues to move higher, and MACD histogram is starting to indicate that momentum could be shifting. We'll have to keep an eye on histogram this week. NASDAQ has already hit its 50 period moving average on Thursday as well as on Wednesday. We have the 10 period EMA and of course this large volume by price bar to ascend. So we are watching how price reacts to this level in this ascending channel. As slow stow continues to point higher, we see MACD histogram is moving sideways, so we'll look for a shorter bar on Monday, Tuesday. One of the things that's very interesting is the NDX A50R, the number of stocks trading above their 50 period moving average, is in the green zone and in the area where you normally see inflection on the indices. If you carry these levels here higher, you can see that this led to a nice rally in the month of February when we had this low on the NDX A50R. So that's a positive for the NASDAQ as well. Negatives are if we get rejected at this level and we break down through this trend line and go down and test the 130 period EMA that's displayed. Looking at a few more indicators for positive or negative influence, we see the all common stock advanced decline line bouncing off of this lower trend line in the descending channel, which coincides with the New York Stock Exchange Composite hitting the lower Bollinger Band and this descending channel bottom. So we're looking for, with slow stow turning back up, we're watching for MACD histogram to put in a shorter bar and hopefully the indicator turn back up and get above its signal line, the lighter of the two. So at the lower Bollinger Band, obviously we are seeing 95% of price action contained within the bands, so we're anticipating with this blue elder stick that we might see another blue or a green elder stick tomorrow. If we see a red one, that just means that we're probably going to see further downside and possibly stow embedding, MACD histogram remaining negative for the time being. CPC, the put-call ratio, this looks moderately bullish for the indices. We hit a peak, which typically coincides with bottoms in these occurrences where we had spikes above these levels here. We had a very nice spike on Monday last week, and in order to get bearish, we need to see prices head right back up to the upper Bollinger Bands and this indicator get down into the red zone. So presently we're seeing more bullish than bearish indication here for higher prices. New York Stock Exchange Composite, this is Elder Impulse enabled. You can see we have a blue stick, came back up and tested the 200 period moving average, the red line. We bounced at the 382, which is a pivot taken to the highs from the October lows. We were just shy of 382 and bounced. We had that major distribution day of 21 to 1 on Monday, and we're watching for a increase in accumulation, perhaps a MAD on this indicator where up volume will trump down volume, which is what we look for after we see a spike on a distribution day or capitulation. So we will watch that along with NIMO, which hit an extreme and continues to trend higher. Looks like it could be heading for a zero line cross and a continuation on bullish momentum on the breadth indicator. New highs minus new lows, very basic breadth indicator here. We want to make sure we keep an eye on this because we have seen a change from bearish breadth to positive or bullish breadth moving in the other direction, similar to the spike we saw back in December. Not quite as profound obviously as October with the Ebola scare, but we hit an extreme and we're starting to see this histogram moving in the positive direction. If we cross back above zero, that will bode well for the bulls. If you're a bear, you want to see this indicator spike back down and see something like December or October. Here's a chart of the Russell 2000. Note this trend line that we broke above in June, that we came up to the upper Bollinger Band, came back down and tested this extended trend line out. We'll watch this as well as the lower Bollinger Band. This extension of this trend line coincides with that level as well. We see slow stow turning and MACD histogram indicating we could see more bullish momentum. We want to watch to see if we have a shorter bar tomorrow as we await the news on the Greek referendum and what ECB and how traders react to the results of same tomorrow. Looking at the comp weekly for a minute, from a bearish perspective, we are down here below the, I just have a 12 period moving average shown here, 26, both relate to MACD, which is 12 and 26. We see this spinning top doji looking candle below the 12 period. If we zoom out, we can see MACD histogram has crossed and moving lower, and slow stow is heading lower as well. So from a weekly perspective, the comp has some bearish tone to its current trend. Looking at the S&P 500 with the same mindset, we can see that we are right below the 26 period on the weekly chart. Slow stow is at the 50% level and MACD continues to move lower. Note the histogram. We want to see this put in a shorter bar this week to give us an indication that we could see a bounce on the weekly chart of the S&P 500. Looking at the New York Stock Exchange advanced decline, this blue line here is the 5 period moving average of the advanced decline indicator. So the indicator itself is invisible. What this is a 5 period moving average. And what we're looking at here are extreme levels. If you follow these lines up, this usually demarked the pivot or inflection points in the S&P 500 as well as the New York Stock Exchange. This is yet another bullish indication for the week ahead. Another positive, This is the XII, the Arca Institutional Index, 75 stocks most commonly held in core portfolios of institutions. We came down and tested the 200 period moving average magenta line on Tuesday, and then we resumed the continuation higher back into Bollinger Bands. The darker bands are the 1 standard deviation, and the lighter bands are the 2 standard deviation. Note Stochk RSI is moving higher. MACD histogram, we want to see this put in a shorter bar on Monday, and slow stow is moving higher as well. The stocks in this index are names that you would assume would be in here, those top 75 stocks, as you can see. In addition, if we look at a ratio of staples to consumer discretionary or cyclical stocks, XLP to XLY, when this trend line, the red and black line, continues to move lower, that bodes well for cyclicals, which you would expect to outperform in an improving economy. The background gray image is the S&P 500. When this indicator turns higher, that means staples are outperforming, and typically you would see lower prices on the index. We'll watch for this sideways pattern to resume lower if we're bullish, or to resume higher and break out here if we're bearish. This is a chart of the US dollar daily. Inside of the Bollinger Bands, inside of this descending trend line, we'll watch price action this week. If we're expecting to see higher prices, we want to see this move lower. And if we're bearish, we want to see a breakout on the dollar of this current triangle pattern. MACD continues to push higher, and slow stow is an overbought zone, as well as the 10-period EMA crossing up through the 20 and the 50. If we look at bonds for a moment, this is a chart of high-yield corporate bond fund. Note the 50-period moving average overhead, prices moving sideways inside of this volume by price band. We're looking for prices to give us yields to give us a better sense of which direction bonds will be moving. Slow stow is moving higher. MACD histogram is slightly positive. Looking at TLT daily, we're continuing to see downside action. Prices being held below the 10-period EMA. Note the volume by price bar here, resistance, slow stow moving down, and MACD histogram showing very little momentum, positive or negative. If we look at the weekly, it lends more credence to possible further downside. MACD histogram, very negative. RSI continues to drop lower, and slow stow is pointing back down. Also note the 10 EMA is accelerating to the downside. The daily, forgot to mention, we see the 50-period moving average accelerating to the downside as well. So we're anticipating higher prices, higher yields going into the summer. Let's take a look at a 10-year yield, which continues to move higher. Note what we say here is rising yield curves benefits banks that borrow at lower short-term rates, obviously, and lend out at higher long-term rates. Rising bond yields also benefit cyclical stocks, as well as sectors XLB, XLI, XLK, and XLF, as you would expect, since most of the banks and financials are in XLF. If we look at the yield curve, we can see short-term rates, the 3-month, are basically at zero, and longer-term rates are higher. So that benefits banks as well as the sectors we just mentioned. Looking at seasonality for a moment, if we pull this slider back 2 years, note the June and July, August, the summer months here. 2 years, as we scroll through these, July tends to do better. 4 years, 5 years, 6, 7, and so on, out to 10 years. Still have a pretty good percentage seasonality wise for S&P 500 more bullish than bearish going into the month of July. Let's take a look at sectors for a moment. Looking across the top, we see real estate, transports, and biotechs. Note all three have turned from oversold and moving higher. That's positive for the market this week. XLB, XLE, XLF, we see the same thing. Slow stow moving higher. XLI, XLK, XLP, same scenario. And we see the same thing with XLU, XLV, and XLY. So all of the sectors have been oversold recently. This is 5-1, so this is more geared towards the last 5 periods or candles. So keep that in mind going into the week, that sectors do support higher prices. Doesn't mean that things can't turn back down with negative news out of Greece and the ECB, but sectors for the time being, excluding the noise or the news, look pretty supportive of higher prices. Here is a chart of WTIC. Note the sideways range we alluded to. Breaking down below that level, we have the 382 below. The pivots from this low at 42.41 up to the recent highs. Here's your 382. Basically a pullback to breakout if we get down that far over the days and the weeks ahead. As with US dollar continuing to move higher, these bars here, that would tend to put pressure on lower prices for oil if this trend continues. Volatility reared its head last week. We had a nice spike on Monday. Whenever that happens, we look for a fade on that particular trade, which we did see off of this lower trend line, and we bounced. So we're looking for further upside unless VIX decides to spike higher again this week. So keep an eye on VIX as well as VIX VXV, the 1 month to 3 month ratio, which we saw a move to 1.04 before it closed at 1.01 on Monday. At this point, we were looking for a fade, and again, this indicator as well gave us the same perspective as far as which bias to choose going into the week. So we will watch for this indicator to continue to drop until it gets down into the red zone, hopefully, and we see prices at a much higher level for the S&P 500 next week. And rounding off volatility for the NASDAQ, we can see VXN. We had a spike, the same thing, same idea as with the VIX. NASDAQ was a nice fade, and we put in 2 blue Elder Impulse sticks on Wednesday and Thursday. So we will be looking at the IBD 50 stocks for a further indication that we might see bullish price action. Some of these stocks have set up, have pulled back, and are near support zone, so we will post additional charts on the blog tonight as well as tomorrow morning for possible trades. Now if we look at these IBD 50 stocks ranked by percent change as of Friday's close, Avago Technologies, AVGO, we pointed out over the weekend, looked pretty good. We had a nice bounce off the 50-period moving average. We're above the 10 EMA, and now we're looking for slow stow to continue to move higher. We're nice volume, and MACD is now crossed above its signal line on the shorter duration. So we want to see momentum on the longer duration MACD histogram to continue to move higher for continued higher prices on AVGO. So we will be watching for any of the stocks on the IBD 50 to set up the way AVGO did for possible trades going into this week. Looking at these stocks in a candle glance format, we see Black Hawk is back on the list again. Nice flag after a nice bullish price action off of the lower Bollinger Band back at the beginning of June, late May. No prices got above the volume by price resistance into the Kirby. At prices above the 10 EMA, Stowe's turning up. MACD is above its signal line. Nice looking chart here on HAWK. Facebook had a nice bounce off the 10-period EMA. Note the very wide Bollinger Bands, volume by price support down here. Slow stow turning back up. MACD histogram is trending higher, and longer duration MACD is above its signal line. Continuing on, Ryanair is new on the list as well. Take a look at that. Price is pretty much moving sideways for the last 2 weeks. Slow stows turning back up. MACD indicating it could start to see more positive bullish momentum. Just keep an eye on histogram to go positive. This is looking good. We have minimal volume traded on Friday or Thursday, 210,000 shares. Want to see that pick up again, but it's new on the IBD 50 list, so we'll keep an eye on it as well. Looking at more setups, this is a list that we created of IBD top ranked stocks that are under $15. We called this list ourselves, looking for candidates that had at least an 80 composite rating and accumulation of B or better using IBD standards. So these names pop up on the list. Note they also have scooter scores, which is the stock chart's technical rank, similar to IBD. So let's take a look at some of these names. Note LLNW breaking out of this descending channel pattern back above the 50 into the Kirby level up here. And if it gets above this level here, around 440, we could see higher prices fairly quickly. Note the increase in volume, slow stow turning back up, and MACD above its signal line. 10E stow MACD setup that did quite well. We mentioned this one last week on Tuesday or Wednesday, I believe. ACLX, Axelis Technologies in the semiconductor group. Note the nice bullish pattern we're seeing here. Looks like it's trying to break out of this descending channel pattern. Note slow stow MACD 10E setup on ACLS. Watch for higher prices on this fairly inexpensive name. Traded 1 million shares last week on Thursday. GTXI, another fairly cheap name in the biotech group. We saw this one 2 weeks ago when it was about to break out above this volume by price bar and Kirby level at the $1.25 and just continued to move higher. So we're up 25-30 cents on this one. No big deal. We just like to trade some of these names occasionally just for the thrill of it. Note Hymax also showed up on the list. Note this double bottom pattern, recent cup and handle. We're looking for prices to break out of this level and test these previous highs at $9.17 and $10.10 over the weeks and months ahead as Hymax continues to get good press on their product offering. Note we're watching MACD histogram continuing its move to the bullish side with its bias. Prices are above the 10-period EMA, so this is looking pretty good going into the week. Note the Kirby and how volume by price tapers off as prices move higher. TK Tankers Limited, TNK, we're also watching this interesting pattern here. Prices getting back above the 50-period moving average, and the 10-period EMA has a 20-period overhead as well as this upper trend line and volume by price resistance right around the $7.42 level. Slow stow turning up, MACD above its signal line, so we have a 10E slow stow MACD set up on this particular name in the oil equipment and services industry group. MXL and the semiconductor group, watching how price action moves off of the upper Bollinger Band. No Bollinger Bands are narrowing. We have this volume by price band as well as slow stow turning from below 20. We'll watch developments on MACD histogram to continue to indicate a more bullish momentum change over the days and the weeks ahead. Note the candle on Thursday. We saw buyers step in and try to keep prices right here at $12.10. So that covers some of the names in the under 15 group. If you want to look at the whole list, I'll display that again. Ranked by percent change. Here are the top 10, 15 in that group. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high tight flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.